Let's see, where shall we start? Had a lot of data pour in last week.
Yeah, it was a really exciting week. As an economist, it's like Christmas every month, the first week, because you get all sorts of data as far as soft data, as we sometimes call it, from surveys of purchasing managers. That's the ISM, Institute of Supply Management, their manufacturing index, their service index. We also got the beige book from the Fed. That was a lot of fun to read through. And then also the non-farm payroll report. So it was an action-packed week. And I think that a lot of it supports that idea that you really kick things off with, that the economy showing signs of slowing, but not necessarily stopping.
And all the data that arrived basically confirmed what you felt anyway.
Yes, and that's something that consumers are showing signs that they're hesitant, that the Macy's CEO said they're being choiceful, right?
Yeah.
Looking for
Yep.
value. And I think that it confirms that idea. But most importantly, in terms of with business investment, CEO confidence, that has really taken a hit with all the uncertainty around tariff policy. And that's showing up in the data. But when we look at, let's just take as an example, the non-farm payroll report that came out. Okay, 139,000 jobs created is not bad, but it's not great. It's not as good as what we had last year. Most importantly, within that survey, they always revise the previous 2 months worth of data. Those were revised down by a total of 95,000. So really, if you kind of think about the trajectory that we've been on, so May was maybe okay, and then we had previous to that with April and February, those were actually weaker than what we thought. So the initial shock from the tariffs in February, those were the fentanyl-related ones, and then the Rose Garden announced ones in April. Those did show up in the data in terms of slower jobs growth.
Oh, let's talk about the Rose Garden. I almost didn't want to bring it up, but you got a lot of uncertainty. And now seeing mom and dad fight and looking like it's going to be a divorce is awful. I mean, it's just destabilizing.
It really is. But, the market can kind of take this in stride. If we look at what happened with Tesla stock, it was down like 15% on that because it's like, okay, well, if he's going to cancel contracts, if they're going to do all sorts of things, the EV credits, that's going to affect the bottom line for a long time. But the rest of the market, I think, would look at that and almost be like, ooh, that's kind of like, you get that sympathetic embarrassment. It's like if you see a couple at a restaurant and they start fighting, and you're feeling embarrassment for them.
Yeah.
I think that's, as investors, what we saw. But when we look at the fundamentals of the businesses, so I think some good examples that we had are this past week. We had Campbell's Soup. Technically Campbell's, because they do more than just soup, right? They're benefiting from a more choiceful, a more cautious consumer as people eat at home a little bit more. They're looking for value. You have Dollar General and Dollar Tree, so two different kind of dollar stores. You also had Five Below, which is another one of those discount retailers.
But Dollar General, they're getting knocked around for a while, right? They're coming back up off the mat, huh?
They are. It seems like these companies have really hit some hard times if you think about, number one, their expansion plans. Plus, they compete with each other with very narrow margins, and then the tariff effects, right? The extent to which the products that they're selling, are they going to be from China, other countries, so the amount that they import, that affects their costs. And then if their consumers, their target market, if they're a little bit more cautious, that affects their ability to pass on those price increases.
Double whammy.
It is.
Yeah.
But expectations have been very low. So it almost seems like, all right, the market saw this coming. It wasn't quite as bad. And so as a result, maybe they can think that now these companies can kind of grow from here. Interestingly, when they were reporting, they said that most of the growth that they were seeing were from higher income individuals. Similar story that we heard from Walmart, right? Walmart taking away market share from like your Targets. Other companies that target a higher income consumer, they were moving to Walmart. Well, now apparently they're moving to Dollar Tree and Dollar General as well.
Hey, let's talk about Kimberly-Clark and P&G, Procter & Gamble, because they made news.
They did, and I always like following those companies, just because I view them as kind of bellwethers of how the consumer is really doing, if you think about what they sell, right, in terms of the personal care products, tissues, and all that. So Kimberly-Clark going through some strategic decisions in terms of their non-U.S., so not within North America. What are they doing in terms of Kleenex and tissues, a joint venture? That looks kind of interesting. But then Procter & Gamble hit the headline with job cuts.
That's a lot of people.
It is, yeah. So
7,000?
Yeah, 7,000 people. The key thing here, though, is non-manufacturing related. So these are more head office, the more white-collar jobs. They're trying to streamline their operations to improve their margins. So when you have an environment in which your costs are rising, perhaps from tariffs, your ability to pass on those cost increases to consumers is falling, you're going to try to hit a bottom line number, and one way to do it is by trying to streamline operations.